user funds and without an intermediary, and I just thought, I need to get involved in this somehow. So it got to the point where I was working full-time at the bank and part-time anonymously as Crypto Texan for this DeFi DAO on Ethereum. And DAO stands for Decentralized Autonomous Organization. It's really a misnomer, but that's what it stands for. So I worked for the Index Coop, creating on-chain crypto-native index products that automatically rebalance based on autonomous code. And then through that, I decided I just need to do this full-time. Need to leave banking. So I reached out to my contacts at Polygon, and they said, "Do you want to join our DeFi team?" And then now I'm at Katana. So, well, that's pretty good TLDR on me, I guess.
Awesome. So in my opinion, I think Bitcoin is like the ultimate savings account, but the next niche that gets me excited about crypto or just blockchain in general is DeFi. I think that's like one of the best things to kind of for the average person to get ahead. Unfortunately, there might be a learning curve, but I think DeFi is something that like really piques my interest. There's always like new people that attend my meetups. Like before we like dive into stuff, can you like maybe break down or like what is DeFi in your opinion, or like for a new person, like how would you explain what DeFi is?
Yeah, it's a good question, and I think there's still some disagreements within the space, and then even broader in like a regulatory standpoint of like what decentralized finance actually means. But in general, I would say it's open source, permissionless, non-custodial financial applications that run on the blockchain. You know, so you could think of lending and borrowing like a bank. There are ways to, and I would also say decentralized finance is also a spectrum where you can be 100% purely decentralized, like Uniswap is an example of that. Or you can be 100% centralized, like Coinbase, right? I would think of them as like a completely centralized entity that just settles transactions from time to time on the blockchain, right? And so within that, we try to operate at Katana on more of the decentralized part of the spectrum and working with open source permissionless protocols and using that as like the architecture within our blockchain. And I'll talk more about that later, but I really just think DeFi more broadly as a way of rebuilding Wall Street and banks on the internet and on blockchains, like from the ground up, and also discovering new efficiencies that can be realized. And I think other institutions are just starting to realize that as well as new products that can be created. Perpetual futures is something that originated in the crypto space that, you know, basically options that don't have an expiration date, an expiry date. But we don't have to get too much into the weeds on that. But that's the way that I would summarize decentralized finance.
Awesome. So I know you were previously at Polygon, and I know Katana was incubated by Polygon, but why, with what you guys are doing with DeFi, one question I had is why did you start a whole new blockchain with Katana and not just do what you guys are doing with Polygon? Because Polygon was a successful layer 2 as far as Ethereum, in my opinion. So like what led you guys to just create a whole new blockchain instead of just doing what you want to do on Polygon?
Yeah, that's a good question, and I think there's a lot of things that came together, just a lot of coincidences that came together at once that really made this happen. But in general, you know, I was on the DeFi team at Polygon, and me and a lot of other heavy DeFi users at Polygon, along with some DeFi builders that we interact with, we were starting to see this trend in the L2 and crypto space in general, where you would start to see like app-specific chains as one thing, but also more so like sector or vertical-specific chains, right? Where you would see a gaming blockchain, or an RWA blockchain, or a DePIN blockchain. And then you start to see DeFi-specific blockchains pop up, like Sonic and Barachain and a couple others. Blast was one. Hyperledger is another. And we just kind of took a step back and said, okay, us as heavy DeFi users and builders, like what would we really want in a truly DeFi-focused blockchain? And it really came down to two main things, and that's like higher sustainable yield, makes sense, and then like deep liquidity as well. Like those security is another thing too, but it's just kind of the default. That should always be a default. But from a DeFi user perspective, better returns, deeper liquidity. And so we just reverse engineered the blockchain, Katana, to try to maximize for those two things. And we ended up adopting a lot of mechanisms that you would see in DeFi apps or protocols and integrating into the blockchain specifically, which is pretty new and innovative. Why not just do it on Polygon? That's a really good question. Polygon's been around for a very long time. Polygon is a general purpose blockchain. They have NFTs and DePIN and DeFi and payments and RWAs. They've got everything. Games. There's gaming on Polygon as well. And for a chain as big as Polygon with so many developers on it to say something like, okay, we're just going to focus on DeFi, kind of a kick in the face to a lot of those developers, and that's not really what Polygon was built for. It was built to be a general purpose blockchain. And then also Polygon Labs is in the process of creating this thing called the ag layer, the aggregation layer, where it's basically a shared bridge between a bunch of different blockchains. And Polygon had some success in getting quite a few different chains to connect to the ag layer. But what we really wanted to focus on was creating a DeFi specific chain to connect to the ag layer to basically be the yield and liquidity hub of that connected blockchain ecosystem. And one of the really big benefits to that would be, like if you did have a gaming chain that wasn't connected to the ag layer, that gaming chain, you still have to find a decentralized exchange to deploy on your blockchain, and then you've got to use BD efforts with that decentralized exchange to build liquidity, because users still need to swap assets on a blockchain, regardless of if you're a gaming chain or DeFi chain, etc. You need to have that decentralized exchange there. But we said, okay, but if we have the ag layer and we just have one DEX on Katana that has very, very deep liquidity, users on a gaming chain that's connected to the ag layer can just swap on Katana and not even know that they've left that gaming chain. So it provides a lot of benefit to other blockchains that want to connect to the ag layer. They don't have to worry about trying to build out some sort of small base layer DeFi infrastructure in their blockchain. They can just focus on what they do best, and that's create a badass gaming blockchain. And so there's benefits there as well. But on the Katana side, we don't focus too much on the ag layer side of things, outside of the fact that we're connected to it. We do work with other blockchains that are connected to the ag layer because they're already starting to tap into our liquidity depth, which is super exciting. But we just focus on building the best decentralized finance chain possible right now. That was a pretty long answer.
No, I love it. So next time I'll have to bring in some Chick-fil-A because you dropped some nuggets. So I'll have to not do pizza next time. So you actually, while you're speaking, I want to add on another part to this question. But so you said for Katana, y'all are building the blockchain for DeFi users. So can you talk about anything else that y'all have done specifically as a DeFi user, what Katana does? And then what I like about your blockchain, can you touch on this? Not necessarily, kingmake's not the best word, but can you talk about why every different vertical within DeFi, that you have just one protocol that you guys basically make the big partnership that makes it like really, for me, it makes very simple for me to navigate, as opposed, I love Solana, I love Bitcoin, I love those things, but like all the DeFi and all the different protocols, it's very hard to navigate which one's the best yield or lending or the best game. There's a lot of noise. What I like about what you guys is y'all basically like pick the winner essentially for like each little app. I don't know if you want to expand on that.
I can talk about that. I'll talk about that part first, which is what we call our core app philosophy or our core app thesis. And this kind of goes into like a big part of our philosophy of being a DeFi chain, where we at Katana believe that decentralized finance protocols have matured to the point where they can be considered core infrastructure in the architecture of the blockchain, right? Just like a layer 2 would choose a sequencer and a prover if you're a ZK rollup, which we are. You should also, you can also pick a lending and borrowing protocol that could be just the lending and borrowing protocol on the blockchain. Same thing with the decentralized exchange. It could be the decentralized exchange on the blockchain, which is what we've done with Morpho, lending and borrowing, and Sushi on the decentralized exchange side. Now, still, Katana is completely open source and permissionless, and anyone can launch any project they want to without our permission. That's the beautiful thing about it. But when it comes to like business development, collaboration, marketing, engineering resources, and then rewards and yield, which I'll talk about here in a second, we're gonna focus those into the core apps. And that's kind of what you said, that takes away a lot of the guesswork for users and DeFi developers. Because if you're a user and you want to know where can I get the best exchange rate for an asset, it's going to be on SushiSwap. If you are wondering where can I get the best rate for a loan, it's going to be Morpho. There's no guesswork for the user, simplifying the UX there. And then from a builder standpoint, that's where we want to see a lot of the innovation is, we call these our core apps. We want to see innovation on the composability level. We want people to build on top of Sushi and Morpho and create better user experiences and more efficiencies and new creative products, tapping into that deep liquidity that's being concentrated into Morpho and Sushi. So that kind of goes into our core app philosophy there. And one more thing I'll say, like everyone talks about liquidity fragmentation throughout different layer 2s in the ecosystem. I don't think people talk enough about liquidity fragmentation within a blockchain ecosystem itself, like intra-chain fragmentation. So if you have 10 different decentralized exchanges on a blockchain, that liquidity for trading is spread out throughout those 10 different exchanges. And you're gonna get worse prices on your trades. You're gonna get worse APYs if you're providing liquidity to those pools. And it's just overall a worse user experience for the user. So that's a big part of our philosophy. And then one of the biggest things that we have that other blockchains do not is we have a pretty diversified set of revenue drivers for our chain. So, and I won't go into all the details on all these, but we've got Vault Bridge revenue, which is our biggest source of revenue right now, and that's assets that are bridged from Ethereum to Katana. Those are actually used in DeFi strategies on Ethereum. That yield goes to the Katana Foundation, and we use that to increase the yield that users would get by participating in DeFi on Morpho and Sushi. Okay, so there's this flywheel effect there. So that's Vault Bridge. There's also a native stablecoin on Katana called AUSD. It's built by Agora, and it's very similar to Circle's USDC and Tether's USDT in the sense that it's a centralized stablecoin, and it's backed by off-chain US treasuries that earn yield. The difference is the yield generated from Tether and Circle go back to Tether and Circle. The yield generated by off-chain US treasuries for AUSD goes to the Katana Foundation, which we then use to increase the rates that users get on Katana. So you're gonna start to see a trend here. The third source of revenue, sequencer fees. All layer 2s pay sequencer fees, typically in excess of the cost that it takes to settle down to Ethereum. I think Coinbase made like 10 million plus in sequencer fees last year. Don't quote me on that. I just wrote a report on it and I do not remember the number, but they made a lot in sequencer fees. And where does that go? On base chain, it goes to Coinbase. We're gonna recycle that into our users through providing deeper liquidity through this concept that we have called chain-owned liquidity, which was borrowed from protocol-owned liquidity, which you have seen in other DeFi protocols that to varying degrees of success. And then our fourth and last primary revenue driver is the yield that's earned from that chain-owned liquidity, which we then further compound into more chain-owned liquidity, or we use those returns to, again, further boost the yield that users get on Katana. So that's our core philosophy, and that's what really separates us from other layer 2s and really makes us a DeFi focused chain.
Awesome. So I have two more questions. Before I go back to Katana, I did want to throw this out. I've asked this same question to a lot of the previous speakers that I've had because I get this question a lot. I think it's always good to hear other people's perspective that are people that are in Web3. And I want you to, if you can, maybe expand on your podcast story. I think that's good. But my question is, because I'm a connector in the space and people reach out for job connections or job tips or anything like that. Whether I have a Web3 background or not, what would you say to someone now, or any tips for them to get a job in this space? Like, is there anything that you would throw out to like someone trying to work in this space? And then if you also want to talk about your testimonial, like how you got noticed from just doing podcasts and like are doing your own thing. I don't know if you want to.
Yeah, no, I can talk about that. Just kind of how, you know, I was looking for a job in the crypto space before I even started working for that DAO on Ethereum. And I noticed like, I need to like kind of have a little bit more of a reputation. People need to know who I am. And so I started learning more and more about crypto and DeFi, and I would make Twitter threads based on what I learned. It was a good way for me to learn, and then also just kind of project out what I was learning into the public, and also on Reddit. And if you're looking for direct, sometimes abrasive feedback, Reddit is probably your best place to go. Twitter, they might just ignore you, which is also fine. But it was a good learning lesson. I learned a lot by just creating that type of content, just throwing it into the ether. And then once I started contributing a little bit more to the Index Coop, I told him, we should do a podcast. You know, we should interview founders of DeFi protocols and have them on a podcast, and you know, that would draw attention to us and put us in this thought leadership position. And some of the people at Index Coop were like, "Oh, okay, so you'll run with that then." And I said, "Oh, okay." And so I started a podcast called Conversations with a Coop. But it was really great because like the Index Coop was very popular at that time in DeFi circles, and so I got to interview really great people like Anthony. So I might be throwing out names out here that no one knows or remembers, but Anthony Sassano, David Hoffman, Kane, who's the founder of Synthetics, Stani, who's the founder of Aave, and it really helped me build my network quite a bit there. And so I think, yeah, just getting yourself out there, learning, using DeFi, and then just talking about it, I think is a really good way to kind of get your foot in the door. And then just general networking. You know, it's decentralized, and a lot of people are anonymous in the crypto space, but when it comes down to it, like people want to work with and do business with people that they like, and just building those relationships are going to be the best way to do it, I think.
I love it. Building in public, that's a common answer from folks. Before we get to questions, the one thing I just want to throw out there, is there anything that we missed so far about what Katana is doing with DeFi, or is there anything you want to talk to the audience about where you see the future of DeFi going, being as someone that's like in the thick of DeFi? Any of those things you want to touch on before we open it up to questions?
Yeah, we're at a very unique and exciting time for crypto, but especially DeFi, I think, where we're starting to get a lot more clarity on the regulatory front, which is then getting institutions a little bit more comfortable, or giving them the permission that they need from the government to actually do stuff in crypto in DeFi. Like just today, Katana announced that there's this whole trend called digital asset treasuries. I don't know if anyone knows what that is, but basically publicly traded companies are saying, hey, let's take a portion of our treasury and allocate it to like DeFi strategies. And so there's this company called GameSquare that's actually out in Frisco, and their board approved a $250 million digital asset treasury for them to kind of invest in crypto and DeFi. And they deployed a portion of that onto Katana. So, we've been saying for a decade, probably, or more, that institutions are coming to crypto, and I feel like it's actually finally happening. So, just very exciting time.
Awesome. I saw you perk up a little bit.
Yeah.
Harlan, you had a question?
Yeah. So there's still a huge group of people, I'd say 90% of the people, 85% still don't get this idea, right? They don't. And I work in real estate, and I speak to people, and when I start going this way, it just becomes, very strange. Where, beside myself just saying, hey, let me try to explain it, where's the best place to point somebody who's new to sort of get them to understand, like, DeFi? Because I think DeFi is, right now, I think that is the thing. So, you know, how do we get someone who, doesn't matter the age, either they're people in their 20s, 30s, don't grasp it, there's people in their 50s, 60s, don't grasp it. How do we get people to kind of grasp the idea, where's the best place to go? And maybe that's something that needs to be filled in somehow, you know,
Yeah.
this educational piece or something, you know?
Yeah, I think it's a really good question. And I think my friends have asked me that question over like the past however long I've been in crypto, and you know, it's tough because I kind of tell them like, well, I don't know, stuff changes so quickly that
That's true.
you know, like it's hard to take a class. I mean, you can take the basics. Bitcoin doesn't really change a whole lot, and that's
Yeah.
like that's
Yeah.
great for understanding like the economics and Byzantine generals problem and like this, you know, Nakamoto coefficient, things like that. But I think it's something we think about a lot on the Katana side.
Yeah.
Is, you know, like when I'm using my banking app, I don't really think a whole lot about like what's going on in the
That's
background,
true.
or
You don't.
like where the servers are located, or you know,
Yeah,
where's my data being I don't think I just use it, right?
Right.
And I think we're slowly getting more and more to a point where we're starting to abstract away the complexities of like the, you know, connecting your wallet and making sure that, you know, you're on the right blockchain to bridge and asset, you know, all these things that you have to do. So we do have a web app right now. It's called app.katana.network. It's in beta, but eventually, you know, we want this to kind of be the place where, you know, we're a blockchain with an app, and there's not, I don't know any blockchains with an app except for like Hyperledger. And we want this to be like the one place that users can go to just experience finance on chain. And we think, you know, we're of the opinion that, you know, if we extract away and like, don't use like all the technical jargon, like, you know, like this is a yearn ERC 4626 vault,
Yeah.
like just like
Yeah.
this is a savings account for your ETH, this is a savings account for your US dollars, here's the rate that you get. And I think if you make the interest rates attractive enough, which is what we're trying to do with this, you know, recycling all that revenue back into the ecosystem, that should be a way to get maybe non-crypto natives or more risk-averse people to kind of onboard. And yeah, but I actually do have, because I had so many friends ask me that question, I put together like a Google Doc of just like YouTube videos and resources that I'm happy to share with people.
yeah, I'd like to.
Yeah.
So, if someone was to invest whatever right now, can you talk about investments and yields a little bit? Or
I can
is
talk
that-
about it a little bit. All yields are, you know, go in at your own risk.
Yeah,
DeFi's
yeah,
risky,
right.
crypto's risky, it's still early, not
Right.
financial advice. Don't risk
Yeah,
more than
yeah.
you're willing to put in, all that stuff.
Yeah.
It's important.
Right, yeah, disclose,
So
disclaimers.
we also have the token of our blockchain, the CAT token.
Okay, right.
And a growth strategy that a lot of projects and blockchains use to attract users is to give away that token
Right,
for doing certain activities on
Right.
chain. So if you deposit into one of these vaults that I'm talking about, you're getting the recycled revenue that I talked about, but we're also giving away like a lot of our CAT token as well.
okay,
And you know, that CAT token, in order to calculate it's not transferable yet, but
Right,
like,
right,
so
right.
it's in the range of like 20 to 30% that you would get by depositing your USDC, which is US dollar equivalent,
right, yeah,
into that vault on
Okay.
Katana. So, but the majority of that's in the CAT token, which is going to be extremely volatile when it actually launches. The CAT token
Right.
is not live yet, but
Right.
it will be probably January. It'll be live. We haven't said that publicly, so
All
that's alpha.
all right, we won't hold
Yeah.
you to, you know, whatever, but it's very good, it's good.
All right.
Yeah, when you made the transition from working at a place like Frost to working in the crypto space, what kind of, I don't know, mental working models did you have to shift in terms of how you thought about your product and how you yourself understood the product and how you interfaced it? I'm wondering how long was that learning process for you?
Just like how I, like just navigating working in the crypto
Yeah.
space.
Yeah,
I would say it was a culture shock. Yeah, because I was full-time at the bank, 9 to 5.
Right.
You know, banks don't break, the product just always works.
Yeah.
Also,
Yeah.
it might break in the background, but no one really knows about it, even employees. And then I kind of had a slow transition because I was full-time at the bank and part-time anonymously working for the index scoop. But then when I went full-time Polygon, yeah, big culture shock. I would say because Polygon and even the Katana right now, like our team is so global that, yeah, I've got to take 10 p.m. meetings sometimes, and sometimes I have to take like a 5:30 a.m. meeting just because I got people in Asia, right, and I've got people in Australia and like just all over the place. And so I think time management it took me a while to adjust to, because when you know, in banking, like if you're in a local bank like Frost, you sign off at 5, all your clients are also signing off at 5, everyone you work with is signing off at 5. In the crypto space, some people are just waking up when you sign off,
Yeah.
right? So
Yeah.
that was a big shift for me. And then also, kind of like what I said, DeFi, smart contracts, crypto, it's still very new. Sometimes things don't go according to plan or as you intended the smart contract to interact and work. And so when those things happen, it can be a shock to like everyone in the crypto space, right? We're at a point now where there's a significant decrease in the amount of smart contract exploits or bugs that we've seen, and I think that's just seasoned developers getting better and better, and the fact that it's all open source and people can learn from other people's mistakes is very great. The majority of the exploits and bugs or exploits that we've seen in the crypto space have been more like on the social side, so that's been kind of a change. OPSEC is very important in the crypto space for sure, because I can't tell you how many times people have tried to like steal my private keys by sending me like a link to do a blog or do a podcast interview, right? Like if they send you the link, it needs to be on like Google Meet or Zoom, something that you've done. Yeah.
It's happening in the regular space too. It's happening. In
Yeah,
real
it's
estate
insane.
and
Yeah.
Mortgage and wire transfers and banking fraud.
If you don't know them, don't trust them.
It's just insane. It's absolutely insane. So everybody's got to be careful.
I hope that answered your question. I don't know.
Yes, it did. Thank you.
It's a good question.
Great, Tim.
Are there any government actions that could be taken that would put you and Katana at a unique advantage or disadvantage?
That's a really good question. I would say that everything seems to be trending in the positive direction for the crypto space right now. Right, we had one bill pass Congress. Was it
The Genius Act? What, Genius Act? Or the stablecoin bill?
Genius? There was Genius passed. Yeah, Clarity. Yeah, Clarity's the next one that we were hoping was going to be passed in December. It doesn't look like it's going to be. That's going to be the big one because that's more of like a market structure bill that really gets institutions and banks in a position where they are very comfortable with actually interacting. So some of that's being front run by those digital asset treasury companies, which is exciting. They're kind of like writing the playbook for. But like we talk to banks and financial institutions all the time, both on the Katana or the Polygon side. I can't think of anything at this moment that would put us in a good or bad situation. I think maybe like when the next election comes around, if we do have an administration, Democrat or Republican, that sees the crypto space unfavorably, that would be bad. So there's just a lot of volatility in the political space on how they view the crypto ecosystem. Didn't see that a lot in banks. I think on the political side, you would see people be really hard on banks in public and then actually not do anything, or people be, we're in, the incumbents are going to protect themselves, and so that's kind of what we're at on that side.
Yeah, let me ask you, consider a scenario of a Great Depression is repeat, right? what is the risk of these cryptos, right? Cryptos versus index funds, S&P index funds, or metals. What is the worst case scenario of cryptos in, the repeat of?
I don't know. We haven't had a depression in the crypto era. I think,
We haven't even had a recession.
it's tough to say. I think that what we benefit from right now in the crypto space is like I said, like a regulatory environment that's very pro crypto. I think the economy is still good. People will say things or not, but I think in general it's good. And that leads to a lot of experimentation and innovation in the tech space as well as the crypto space. And the bad thing about that is when things get tough, those innovations start to crash a little bit. And they fail, right? That's creative destruction. That's a whole big thing in capitalism, and it's important for the growth long term of humanity. If you feel that way, that's what I subscribe to. And so I think more long tail assets in the crypto space probably not going to fare very well at all. I think Matt said it best where he said, Bitcoin, Ethereum, and Solana are where most of the developers are in the space right now. And a lot of times when you say Ethereum, you lump Katana and Polygon and other Ethereum virtual machine chains into that. But I still think like Ethereum L1, Solana, and Bitcoin are going to be the strongest and most resilient to weather some sort of depression. Depressions are weird. A lot of things that you think won't fail will. But I'll also say too, like, does the government try to print itself out of that depression? They start a war to get us out of that depression. And then, both of those scenarios, I think Bitcoin's probably your best bet.
Yeah, but what if the state takes the control of, of governance of cryptos, the stable coin? Obviously, the attempt is being made, state
Yes.
is on the path to take the control of cryptos directly and indirectly.
Yeah,
What is the long-term ramification?
I think that's a good point too, because like I said, it's a spectrum, right? Just because it's something that's built on a blockchain doesn't mean it's decentralized. The blockchain might be decentralized, but the applications on top don't always have to be. Circle in USDC is a good example of that, right? That's a centralized protocol that just uses the blockchain, right? The assets that back USDC are off-chain in bank accounts, right? Circle has the ability to freeze USDC if they want to. They can move it around if they want to. And so it's a centralized asset that just happens to be used in DeFi quite a bit. So there is like that type of risk for DeFi. I think too, I'm just gonna think off the top of my head here. If there was a depression, you need to start looking for industries of growth to help pull you out of that depression. And I feel like the crypto in like AI space would be like one of the like number one, number two industries that you would want to help support to get out of that. Bitcoin is decentralized. If you've got Bitcoin in a self-custodial wallet, no one's gonna take it from you. That's the beautiful thing about it. Same thing with Ethereum and Solana.
Thank you.
I think when you talk about things like depression and that kind of thing, if you've got something, people will run to efficiencies, right? That's the most efficient thing, right? The thing that takes the least energy and gives you the most in return, right? That's so whatever's is the most efficient and something without government control. This is my little opinion.
No, I agree. One of the things I wanted to add was, or chime in on is, whether it be Bitcoin or it could be religion or anything like that, when you talk about governments or states taking over, one of the things you might find is when something like is persecuted or like gets a lot of resistance, that's when it starts getting like a lot more attraction and adoption. I'm just saying, like, when it comes to Bitcoin, if you like look at like other countries that like have like adopted were early adopters, it was actually like a fallout of someone like pressuring them so that's what I would say. Like if someone was trying to dictate your Bitcoin, that actually might drive more people to use Bitcoin. So That's what I was just
Yeah,
thinking.
that's interesting. Yeah, there's
Yeah,
an impression.
can I-
What an opportunity for
Yeah.
Bitcoin, the test of resiliency of that network and that asset.
So, whatever it was 4 years ago, when I got into the crypto and real estate space, and I went to Miami to visit with Proppy,
Mhm.
and there, I went to the conference. Fly to Miami, get in the cab, Uber, it's a guy from Venezuela. Oh, what are you doing? What are you doing? I said, oh, I'm, learning about crypto and Bitcoin, and, I'm going to this conference and I'm meeting with this company that deals with it. He said, well, Venezuela fell, right? How are they getting around? Bitcoin. People in Russia who need to move money, they're using Bitcoin. So,
What-
it's being done. That's where people are running to. They're
South
running
America also really liked USDT.
Yeah.
Yeah.
So-
They like to use dollars down there.
dollars, yeah.
US, on the blockchain,
Right.
USDT.
So, another plug, Katana will be at Dev Connect in Argentina, their team. I actually know some other people, I don't know if they want to announce it in public, but they're gonna be in Argentina. But I actually went to Argentina last year, and one of my takeaways was, there was like a little shop, I went to like a onboarding form, I just went to a crypto event there last year. I was walking to my like Airbnb or whatever, there was like a little shop, and you looked in there, the politically correct answer, I would say Jimmy season. I would say there was like 3 old women in there that were like, be older than my grandma, and on the front, on the outside sign was like, we accept Tether here, and it was like a soccer player like promoting like Tether is accepted here. I'm just saying,
Wow.
like in Argentina they have a thing called cuevos, where it's like caves where people like exchange the currency. So like people that live in Argentina, because of, we might have inflation, but other currencies around the world use our currency, so we get benefits that other countries don't. So they have Argentina as an example, they have crazy inflation, so they're looking for crypto jobs like it's mana or just like gold, like because they're able to earn a way better stability currency than their own. So I'm just saying something like that, like the government might like bash crypto or Bitcoin, but like the citizens are like flocking to it. I'll take one more question, then I'll let everyone get back to like networking and heading home and eating all the food. But go ahead, wrap it up.
Sorry, earlier you said about game sports taking their treasury.
Game Square.
Frisco.
Game Square.
How long was that integration? And then RB is, how do you gain confidence metrics to influence others to follow suit?
It's a good question. So when did they first deploy some of their assets?
Or how long that, I guess, project cycle was to integrate in?
Yeah. So, their board originally approved $100 million to be allocated to a digital asset treasury, and then they had a capital raise, and then their board said, actually, let's go ahead and they had a successful capital raise, and they thought that it was because of that allocation to the DAT. And so they said, okay, actually, let's increase this to 250. And just a testament to the Katana Foundation's BD team, like we're talking to teams that have digital asset treasuries, and we're saying, hey, this yield on Katana, it's pretty good. You should deploy some capital. And so I think they only deployed about like 10 million. The strong majority of their digital asset treasury funds are on Ethereum L1 mainnet. They deployed that. They did their initial deployment. We announced it today, but their initial deployment was about 2 months ago, I would say, and then they're about to top it off to get to like about 10 to 15 million. They're still working on the numbers. And that's just exciting, and the fact that they were willing to do like a press release with us, and we can talk about it on socials and things like that. That's the type of social signaling that we're trying to get, and hopefully that just other digital asset treasury companies see what GameSquare is doing and where they're deploying their assets, and then they'll also look to Katana. So that's kind of what we're hoping to. And they're doing it through a risk manager called Dialectic, who I think he's based in Sweden, this guy. But they're not doing it themselves. They contract out someone else, like a digital asset treasury manager, to do it. Did I answer all your questions?
So thanks so much for being an amazing guest speaker. I know a lot of people got
It was
a lot of
fun.
knowledge. Where can people find you, and any closing remarks, like where can they follow you?
On Twitter @crypto_Texan, and then check out the app, app.katana.network.
Also, sidebar, you asked about I like to, in my head, TVL, total value locked. Didn't y'all just hit 200 million, in total value locked?
600 million.
Oh, 600 million. Oh, see, I'm back in Web 2, not even in Web 3.
$600 million in assets.
So I just wanted to throw that number out there. I know that number might mean different people to different things, but that's like a strong indicator of like them getting traction as far as people getting yield. But
We're happy with it.
yeah, thanks so much. Feel free. I mean, I don't know if Justin's leaving just yet, but you can